Yay, Recons video on Sunday, the 15th of October, 2023. Just gone 4:56 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. We had a ripper of a week, good day trading opportunities in the E-mini. I'm actually going to start off with a 45-minute chart on the E-mini because we talked about this last weekend's video, talking about needing to complete on the downside with a pullback to end of trend move on the intermediate time frame on the 45-minute chart. So we'll go to that first. So this is the usual traditional setup of the better indicators. Two panels side by side, left hand side, everything to do with volume. We got better momentum beneath the price bars, which is a volume based momentum indicator. On the price bars themselves, we have better pro-am, which uses the average trade size to identify professional and amateur activity. Amateurs in yellow, professionals in blue. On the right hand side, we have better sine wave, which is the plate of spaghetti beneath the price bars, which is calculating the cyclical activity in 3 different time frames. And those support and resistance lines are printed on the price bars themselves, and then breaks of support and resistance define uptrends and downtrends. Downtrends in white, uptrends in red. And when price and volume are both in sync, we have confirmed uptrends with a background in red and then confirmed downtrends with a background in gray. So last week we had a nice bottom being made, pullback to end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame. That's often a place where we get a bounce, and we need confirmation. We got confirmation because we have blue professional bars coming in here at the lows. A bit of bullish divergence down here. Wasn't an exhaustion sell pattern on this 45-minute E-mini chart. However, on other time frames like the daily time frame and some other indices, we did actually have an exhaustion signal down here. So it was pretty significant. It was a pretty good read coming into it, but it didn't catch the topping move that we had here with exhaustion buy and a Rambo pattern right at the highs here up at 4,600. So this move was pullback to end of trend. We were likely to get a bounce, which we got this week, but we're going to always have to complete the intermediate time frame. So we got a pullback to end of trend on the lowest time frame, and we're in the process of completing the pullback to end of trend in the intermediate time frame. And we've also got coming up this next week, this cyclical resistance is going to come in, and that's going to come into play on the 45-minute chart here. So that's why we've got the weakness at that point. And on this 45-minute chart, in terms of better sine wave, we've actually not broken into a proper uptrend because we have to break above an intermediate resistance in order to break us properly into an uptrend. Now, we've got a pretty good read here on better momentum of minus 29,000, which is good to kind of sort things out. We've also got blue professional bars come in at the dip. So let's wait and see if this plays out fully to pull back to end of trend, and maybe that energy comes in on the highest time frame here and continues to push us down further. Or was that enough of selling to come in? The blue professional bars have stepped in. I would say if we can break above those blue professional bars, that would be interesting. Above the high here, which is 43.76 and a bit. So anything above 43.80 would be interesting to break us into a confirmed uptrend here on better sine wave. But let's wait and see. I don't think that's the most likely play. But this has to complete pullback to end of trend, and we've got weakness at the moment. Let's go to the daily chart now of the E-mini. It's confirmed uptrend. We've been talking about this for months and months and months. And what we put in here with this activity, this bottoming activity, we've got nice supports on the lowest time frame, on the intermediate time frame, came in, bounced off a previous resistance level on the highest time frame, and we're in a confirmed uptrend here. And this is the reading I was talking about. On some of the indices, it's about negative 5.2 million or so on better momentum. It's pretty decent on some of the indices on the daily chart, though. It has come in there. I think the NASDAQ has, and maybe the S&P 500 index. I can't remember precisely. But anyway, so we've got a confirmed uptrend on the daily chart, so we're looking for areas for the market to hold as we've had this little sell-off. The 135-minute chart here, there's all those blue professional bars come in here. We've got nice supports come in, confirmed uptrend, a background printed in red. This exhaustion buy pattern's almost getting us going, maybe a bit of a short covering rally. There, bearish divergence come in. So we're waiting to find the area where this is going to catch, and maybe blue professional bars are going to come in here, or an amateur down bar where the amateurs get wrong-footed. We come back up above these levels of 4,400 and a bit in order to confirm that uptrend. We talked about the 45-minute chart. Here's the 15-minute chart where we have the beginnings and the ends of the week marked with a solid yellow vertical line here. So this is this week's activity where we continue to race away. I mean, we gapped down with the open on Sunday because of the news out of Israel-Palestine. And that was like a knee-jerk reaction. a bit of an amateur move, selling that open. And then as soon as the market starts to open up properly on Monday, all of those traders are put under severe pressure as the market catches up and up and up, and they're forced out of positions there. And it's only midweek that we topped out and we were able to collapse here when we had resistance on the highest time frame come in here, and that trending activity, the red bars here upwards, played out with a nice pullback to end of trend on the lowest time frame, followed by pullback to end of trend on the intermediate time frame, all happening underneath this resistance on the highest time frame. And I always talk about these pullback to end of trends rippling through the time frames, even with a pattern here which looks confused. Better sine wave is able to pull that information out to get that cyclical activity. That was the end of a little trend move on the lowest time frame. Started off when we held here and broke above resistance here, and it played out. And this is the pullback to end of trend on the intermediate time frame, and that started when we broke above resistance on the intermediate time frame, and it plays itself out. And then we have a little bit of strength, and then finally it collapses into a confirmed downtrend here, and we've got blue professional bars selling it down at this point, having had flush patterns flushing out those buyers at those highs. So this chart needs to complete on the way down, resistance to support, and we need to see maybe an exhaustion sell pattern, something down here, but more blue professional bars. They sold it down here. They need to pick it up again somewhere between this 42.60 and 43.50 type level. So somewhere in that region, I suggest that support on the highest time frame would come in and would catch and rally. And then the 13,500 tip bar chart, which is the highest time frame tip bar chart that I look at. We had so much activity this week that actually the week's activity is on this particular chart. The week starts a little bit over here. So let's go to this one. So the week's activity, we have the gap down open. The blue professional bars step in there, and then we rally until we get exhaustion buy, bearish divergence. We come back up. Look at this lovely little pattern here. Almost a double top being made at this point here. The blue professional bars taking profits up here. We busted some stops above here, and they used that opportunity to get in, and then we got an exhaustion sell pattern getting that move going. So that's the strength of the selling at that point. We have a weak little rally that's faded, and bang, we move to the downside. End of the week, got a bunch of blue professional bars come in. Who knows whether they were just squaring off positions, ends up catching down better pro-am. So that's a stair-step down trade at the moment. So on this chart, we haven't seen enough activity on the downside to bottom it. So we're in a downtrend in terms of better pro-am. This week's activity, you can see here, that was the rally from last week. There's the gap down open on Sunday. We continue to rally, better sine wave keeping us in that uptrend with all the bars in red until we finally get a pullback to end of trend. Here, lowest time frame, intermediate time frame, and then second cyclical turn after end of trend. So there's one cyclical turn after that end of trend on the intermediate time frame, and a second cyclical turn after end of trend on the intermediate time frame. And that's an area, the second cyclical turn after end of trend, where the market has really maxed out, and we can potentially see changes in trend happening. And so as soon as that's maxed out, we start to break into a downtrend. We have a little retrace, and then we're off to the races on the downside. Highest time frame here, resistance overshot, support looks like it's going to be overshot. We're in a downtrend on this time frame as well, and this isn't enough to catch it on the downside. Just a little pullback to end of trend on the lowest time frame with pushing past support here, which is near that breakout level. So that's not enough to end things on the downside. So we're still in a downtrend on the tip bar charts, and we'll wait and see how that plays out. We need a reading like this one. That's the exhaustion sell getting the move going here. And on better momentum, that was minus 31,000 in this time frame. And we need a similar read to end this move to show all of that volume that was selling down has picked it up at the end of the trending move on the way down. So there we go, a quick rip through the Emini charts all the way from the daily down to the tip bar charts. Let us have a look at our futures charts and the triple signals that have been generated in the last week. So typically we start off with the Forex charts. So we'll start here with the Euro chart, 1500 tip bar chart here. You can see we had a short signal right on the open of last weekend. There, that dotted white line is a short signal. Didn't go very far. We retraced quite a bit. No blue professional bars in that activity, which is interesting. But now we've come down to levels where the euro did start to rally at 105 down here, and the professionals have come in. These were getting the move going, and then maybe now with this weakness, we're starting to see blue professional bars coming at the lows. But we don't have exhaustion sell down here. We have exhaustion sell getting this move going and some flush patterns that are playing off that, but we don't have a proper exhaustion sell down here. So maybe we're going to go past that 105 level, 104 and a bit, trigger some stops, get all that volume, good exhaustion volume traded out of the market that allows us to rally at that point. So that is the euro chart, British pound chart. We had nice signals at the end of last week showing this rally, maxed out at 23.5. No blue professional bars at those highs, and then on the way down we've seen some blue professional bars, but it's not at the lows down here. We do have exhaustion sell though, so really no signals this week for the British pound. To me, the Aussie dollar looks really interesting on the daily charts, the higher time frame charts. We're starting to, this 63 level is really interesting. There's a lot of high average trade size volume coming through. So we had a bad signal here, was short at that point. That was just too far away from the activity here, and that exhaustion buy pattern should have been up there. So that's a spurious signal that doesn't make any sense. Down here at the lows, we do have blue professional bars coming in, exhaustion sell. We're not oversold yet. The background has to turn red for that. So we've not got a signal this week in the Aussie dollar, but the equities markets bottoms again or tests again this week and finds that second right shoulder, if you like, and bounces from there. The euro, British pound and Aussie dollar would bounce with that. Japanese yen, that's interesting. It's a good little signal here with exhaustion buy, bearish divergence flush, blue professional bars at those highs, exhaustion sell getting the move going. We've had another signal, triple signal long at that point, but we didn't have exhaustion sell down here. Starting to strengthen, blue professional bars come in with a stair step trade there. Let's see if that holds and that continues to break above this area. And then let's look at the E-mini on the 13,500 to watch out for signals. So that was our signal last week, signal long, middle of the week, showing that the downtrend was over. We had all kinds of good exhaustion sell patterns, and look how junky that market is, but it picked a good entry point down here, and at the end of that move we got two signals short at those highs, again based on exhaustion buy, bearish divergence. I wouldn't have liked that so much because we didn't have blue professional bars right at the highs, but the second signal, you can see we did have those blue professional bars right at those highs, so that's really nice. Overbought with background in grey, so all three non-correlated indicators come together, and as I said, we've got stair step condition here with blue professional bars come in and the trailing stop from Better Pro-Am steps down to that point. So expect a continuation of the E-mini downtrend for at least the first couple of days of the week. Now, gold and silver, these took off, and we don't have any signals to go long down here. I think it's because we have a setting in the triple signals that everything has to happen within a 250 bar window. The exhaustion sell bullish divergence pattern, the breaking the trailing stop on Better Pro-Am, and the oversold condition. And so it just must be that that break of Better Pro-Am was too far away from this bullish divergence pattern on the way down. It's a pity there wasn't one there, because gold has just ripped this week. And again, it was a gap open that kept on going. So the equities markets sold off with a gap down and they got faded, and the market went the other way and took them out before a midweek market topping out and then coming down. But gold gapped up at the open and just kept on going this week. So that's really interesting. At the levels that gold is going to, we're up almost at $2,000 on gold. Silver, same deal, had a super strong week. Now this is more like it. There's the exhaustion sell bullish divergence, a flush pattern down here. Some blue professional bars come in, we test and test. We finally have a nice little double signal, and then bang, we're off to the races. So these blue professional bars at 2250, I wonder if that's getting the move going. This is what I would typically look at as a gathering pattern, a whole bunch of blue professional bars taking out the 2250 level, which has been psychologically pretty important for a silver market over the last couple of months. And so they finally grab it and just buy everything in the stack and get this move going, and it will go to test recent highs at least. We're looking at the momentum of the gold chart as well. And again, based off everything that's happening in the Middle East, the uncertainty there. Bitcoin, we had some signals a couple of weeks ago, went to a little bit of a rally, 2850. It's super volatile, super junky down here. I don't know, we don't have exhaustion sell down here. We have some blue professional bars come in, but nothing to set off a triple signal down here because we don't have that exhaustion sell at the moment. So Bitcoin, and again, be a risk on trade. We need the equities markets, the euro markets to turn around this week for us to see some strength in Bitcoin, I would suggest. Bitcoin at this point is decoupled from gold and silver as a rush to safety play. Clearly this week it was the gold and silver markets that benefited most from that huge amount of uncertainty that's coming out of the Middle East. All right, crude. What did crude do? So crude did gap up at the open on Sunday, but all blue professional bars that took profits, and then we had a stair-step trade here, bang, where Pro-Am comes down, blue professional bars, that's the last opportunity. Well, this one was an opportunity to sell as well, and then it crashed. Then, down at 83, blue professional bars step in again, exhaustion sell, bullish divergence, we're oversold, the background in red, bang, we get two nice little triple signals here at 83. So we had a lot of topping out activity on the daily chart at 94, and then because of the situation in the Middle East, crude is rallying. But it was the professionals needed to force traders out of their positions here and then come back in, closing the gap in order to really start the rally properly. So they were happy with that. So that was crude. Now natural gas was very strong last week, and this week we had short signals. So we copped out not a lot of blue professional bars on this particular top, but when we tested up here, you can see the blue professional bars here and here come in, and we sold off pretty hard. Two signals short on natural gas. And then copper, we had a signal last week, long, it's come back in to test into this area. So here's more blue professional bars come in at 350 and a bit to mirror the activity here. That exhaustion buy, bearish divergence at that point. But let's see if that area holds. Again, it's going to be a risk on play. If equities ends up turning around this week, then we might get some strength in copper. Now let's look at the ags finally. So we've got corn here, super volatile. So no signals, except the signal's short this week. This is a very odd place to have that signal. Yes, exhaustion buy, bearish divergence, but no blue professional bars. And then a huge amount of blue professional bars come in, whatever the news was or the view of the market was, that radically changed here. They bought everything in the stack, and then it's continued to rally there. So corn starting to strengthen. I had talked about the corn on the daily chart a couple of weeks ago that I thought it was interesting. Soybeans, same thing, a whole bunch of blue professional bars midweek. We had some signals at the beginning of the week, but pretty noisy down here. Difficult to see that that was actually a low that was being bought. No blue professional bars here, but then they just bought everything on this little weakness. They've held the market at 1272. No blue professional bars at that point, but we're in an uptrend on soybeans. And then lastly, wheat. So wheat, we had short signals at the beginning of the week, but that was playing off this, and we didn't have blue professional bars at the highs. So that's a signal that you could discount. And now again, a huge number of blue professional bars just buying everything in the stack, and we have stair-stepped here with blue professional bars. So seem to be strengthening, and that no doubt is because of the geopolitical situation globally at the moment. So there we go, quick rip through the charts. I'm expecting a continuation of the weakness in the Emini for the first couple of days of this week, and then let's see if we can find an area to hold with some exhaustion patterns on the tick bar charts to build that rally again on the equities markets, and then everything else maybe will fall into place, but probably be driven by quite a lot of news this week and any updates on the situation in the Middle East. There we go. Hope your trading is going well. Looking forward to next week's trade.